We're going to be talking about our 3 full doc non-prime programs. And as I said earlier when we're discussing bank statement products, whenever we use the term plus, we're talking about the highest tier in the product offering. So the top tier category to look at would be the 5,000 NP plus, 5,000 non-prime plus. Someone may even use the term NP to mean near prime. I think that when we talk about the NP plus, what we're really talking about is we're really talking about a near prime full doc type of borrower. That's a borrower that would be typically going to a Wells Fargo or a Chase or B of A, and for whatever reason, they don't fit into that box. The non-prime plus on the full doc is very similar to the bank statement in that we're generally not offering any kind of exceptions to this product. So the plus category products don't have any room for exception. They offer, again, the best pricing because the non-NP plus, the NP, and then the RH are basically deteriorating from a credit standpoint, more flexible, I should say, not deteriorating, but they offer more flexible, as we go down in that category, offer a level of flexibility that comes with higher rates. So the first thing to be aware of on the 5,000 NP plus is that we don't offer this product on investment properties. It's imperative that you're aware of that. Again, it's geared towards your near prime borrower that would otherwise go to a bank, get the best pricing. Typically, they have higher FICO scores. As you'll see, we offer this with 660 minimum FICO score. So you cannot get anything on the NP plus if you have less than 660 FICO score. You'll also notice that we have different loan amount minimums. On this one, it's $150,000. Don't be surprised if we push up our minimum loan amounts higher than what they are today. We have been making exceptions for lower loan amounts, but it's very likely in the near future our standard will be $150,000, with $100,000 being the minimum as an exception. We have several products. I'm sorry? No, we'll never forget you. So those are a couple of things I wanted to point out to you. The same documentation requirements from an aging standpoint applies to this. You're talking about 90 days. Same process with regards to appraisals and appraisal review. If we jump ahead to page 3 of 6 on this product, you'll see some limitations on collections and charge-offs that you need to be aware of. Again, on the NP plus, we're going to be stricter from a collection standpoint. And if you go further down to credit, you're not allowed any 30-day, 0 times 30 in the last 12 months under the NP plus. Again, we're talking about a near prime borrower. This is not a non-prime borrower that has mortgage rates, okay? Bankruptcy, 24 months. Foreclosure, short sale, 4 years. So you're talking about a higher caliber borrower on this product. So I think that's pretty much the critical elements I need to point out to you. I will point out to you some things with regards to this program and the fact that I do not believe that we do not offer non-warrantable condos. So that was what I was just verifying. I was going off of memory, that it would only be on an exception basis, and I've already told you that there's very limited or no exceptions. So don't bank on the exception. How's that? All right? I would hate to break your dreams and hopes of getting an exception on this. Yeah, we allow a lot more flexibility under this product. To give you an example, a loan that I looked at the other day was a borrower that was at Wells Fargo, was approved, but for example, the borrower, his primary business was not real estate, but his side business was real estate. His primary business was in the clothing industry, but he buys and sells real estate and develops and things like that, and he qualifies with income. But Wells Fargo ended up not wanting to do the loan simply because he owned 5 properties that he was concurrently redeveloping and things like that, and they didn't like the fact that the bulk of his income was coming from real estate, and his primary business wasn't real estate. But from an income documentation standpoint, for all intents and purposes, he's a full doc borrower that qualifies. It was just not a product that Wells Fargo wanted to have in their portfolio for a super jumbo borrower. I think it was a $2 million loan. So they didn't like it. And they have limitations, as you know, on a lot of the jumbo programs. Remember that the jumbo A programs, they don't want to do a loan for a borrower that has more than 4 financed properties. That's a reason that a borrower that has multiple properties would not be able to get a loan from a B of A or a Wells Fargo. In this case, the borrower's source of income, they didn't like that, even though he qualified. So that's an example. He was a good borrower. He wasn't a bad borrower. We would do that loan all day long, but not B of A. So, or not a Wells Fargo, I should say. So that's pretty much it as a summary. I think the point is you can read the rest of the guidelines and familiarize yourself. Max, on this program, on our program, as you'll see, is we're allowing up to 90%, up to $1 million with 680 FICO score, and they could do an institutional second. There is none of our programs, by the way, allow for seller carryback across the board. So seller carrybacks are not going to be acceptable. I will let you know that it is in our plans probably in the next quarter to come out with a second TD program to do a combo. So that is something that will be forthcoming, and potentially even a second TD be able to do a combo, 80-10. Okay? So let's now go to our 5,000 NP program. Again, now we're becoming more flexible from a guideline standpoint. This program, again, like the 5024 BS, this is sort of middle of the road. We talked about a variety of bank statement products. We talked about the 5024 BS being in the middle of the road. This is, in this profile, it's right in the middle. We actually, on this program, go down to 500 FICO score. Okay, so the 5000 NP has more flexibility, and as you can see, this sort of has a matrix on the page 1 that tells you sort of some guidelines there. So you can do on this program also 680, 90% to $1 million, and then if you've got a 1 times 30, there's a different tier that you can go to and to be able to get the highest LTV, and then 0 times 60 puts you in a different category. So the same higher score as 660 with 0 times 60 mortgage rates in the last 12 months will get you 80 LTV. So you have to follow the 12-month mortgage history or rent history if you don't have a mortgage to determine basically what the max LTV is going to be. And this program, again, goes down as low as 500. Now, let me tell you something very important to be aware of. The FICO score is based on the primary wage earner, not the lower of the two. And in other words, if I have this program, if I've got the husband has, let's say, a 680 and the wife has a 620, if the husband is a primary wage earner, that's the representative FICO score on this program. That's not the case on the bank statement program. On the bank statement program, it's lower of the two. On the full doc, it's based on the primary wage earner. Very important to be aware of. Okay? So again, the rest of the requirements and guidelines are very straightforward. You'll see that the reserve requirements, depending on some different categories, change from 3 to 6 months. Let's scroll to some additional pages. Similar characteristics regarding age of assets. We've talked about the bankruptcy. If you change to page 3 of 7, you'll see chapter 7 and 11. They have to be discharged for 12 months from closing date, and it's calculated from date of discharge. In chapter 13, there's no seasoning requirement for chapter 13 bankruptcy when it's discharged prior to closing. So some characteristics there to be aware of. And then, again, like I said before, if we change to page 4 of 7, you'll see the credit profile on the bottom, and you'll find the minimum FICO score is 500. This program allows 0 times 90. BK 13 to settle, like I said, BK 7, 11, 12 months, foreclosure 12 months, and short sale settle. So this is mid-tier non-prime product that allows you some flexibility, and we do exceptions on this program, unlike the Plus program. Now, I do want to bring to your attention a couple of things that are very important on the NP and the RH program. So these programs allow cash out to be used towards reserves, as with compensating factors like we talked about. However, when you look at the NP, the 5,000 NP and the RH, you will also find some different levels of flexibility with regards to allowing charge-offs and collections up to a certain amount to be left open at closing. And there are certain thresholds that if the borrower has a certain amount of cash in the bank, they can actually offset that to keep those open. And in other words, if the borrower has the money to pay it, it can be left open. There's certain formulas that can be followed. The point that I'm trying to get to here is that you cannot use the cash out to meet those collection charge-off requirements to leave them open. You can use cash out to meet reserves only, because it's happened to us before where we have said that you can use cash out to meet reserve requirements based on compensating factors. And in those cases, we've had scenarios where they're trying to also use that same cash out, not only to meet reserves, but also to meet the requirements to leave charge-offs and collection accounts open. So it's important to differentiate and for you to understand and convey to your broker that if the borrower has those funds in their account today prior to closing that is equal to the collection charge-offs and meets the formula, that's fine. But don't expect to take cash out and not pay collection and charge-offs. It's not both. So the cash out can be used with compensating factors just to meet the regular monthly reserve requirements. That's the bottom line here. That's the end of the story on that. Okay, David? Thank you. You're welcome, David. It's a topic of conversation quite often between us. So it's important to understand that. Now, a couple of things, since this is full doc, it's important to realize that in the case of self-employed borrowers, we do require P&Ls for those years that there's no tax returns. So at this moment in time, it's important to understand that it's not mandatory for someone to have filed their tax returns today. They still have time, but we do require a P&L through 2016, and in this case, potentially maybe January or February. So we would want a 2016 P&L. Again, we're not talking bank statement loan. We're talking about a real P&L, right? Not to take the gross income and total bank statements and that becomes, no. This is talking about a regular P&L. It's a full doc loan. So in this case, to us, this full doc loan for a self-employed borrower would include 2014 returns, 2015 returns, 2016 P&L, and potentially, sort of a year-to-date, P&L. Now, remember, those P&Ls don't have to be by CPA or anything. Those are internal P&Ls. But just from a documentation standpoint, it's important you understand That's the kind of documentation we require. And that's a normal P&L, and it doesn't have to be on account letterhead. So with that being said, we are going to move towards Program 5000 RH.